Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. Let's talk about the typical trading journey, talk a little bit about my trading journey as well, the stages we see, and how to avoid being stuck in what is effectively perpetual losses. And I think the interesting thing about splitting this up into 3 groups, 5 groups, whatever, is you can identify, at least I can, which type of person falls into each category here. The hardest part about trading is the time commitment, finding a routine, developing a routine, and being disciplined. I don't think great traders are born at all. I think they're made. I certainly wasn't born a great trader, but it can be learned and is learnable. And that's the important part. So in stage 1, this is most people forever. They're stuck here. They lose everything most of the time. They're, liquidation is stop loss, high volatility, high emotions, no focus, no system, no risk management. They're effectively gambling, right? That they're not really trading. They're not investing. They're gambling, which is fine. I don't care what people do with their money or time. If it's entertainment, it's entertainment. But don't go into this thinking all you need to do is click a few buttons and boom, I made a bunch of money. I think what really trips people up, especially in crypto, is they will join when there's like a hot sector or a hot event, or they'll be timing the cycle correctly, sort of accidentally. And you'll just assume that they've got this hot hand and they're just great at everything. And this was me. Okay. This is everybody when they first started trading. And then the bear market sets in, reality sets in, and you start losing. The difference between, I think, me and most people was I was trading extremely small early on, and I was just DCAing most of the time, learning the fundamentals of trading, learning the fundamentals of crypto and Bitcoin. Whereas I think most people, when they start, they're just focused on, I'm a trader, I got to trade, I got to find all these trades. There's got to be a trade every day. There's got to be a specific P&L target I'm hitting every day or whatever. That is a recipe for long-term failure, definitely. So most people don't recognize or don't care that they're in stage 1, and that's fine. But some people eventually get to stage 2 where they get big wins and big losses. And honestly, if you're not trading leverage, I think a lot of people in crypto gravitate towards stage 2 just because it's hard to be wrong some of the time when the markets are so buoyant and bullish. Everything's bullish at once. So they're going to have the big wins and they're going to feel like they're Superman, but they're still going to have volatility. They're going to have upward and downward volatility, high emotions. They're not cutting their losers. They've become a community member. they're here for the long haul. This trade becomes an investment, which becomes a bag I'm forgetting about and thinking about once every 4 years. I think in stage 2 is where you start to realize that you need something to look at, whether it's basic moving averages or somebody's tweets or somebody's paid group or some fundamental report. You need something at the end of the day. You can't just do this blind most of the time. A price chart. And I think in stage 2, people are also starting to develop the idea of risk management where I want to make money here. I don't just want to lose money all the time. But ultimately, they're still over trading, don't have an edge, don't really have a system that's honed and understood. And this stuff takes years for most people. It certainly took me years. My luck was knowing that I didn't know better and knowing that most of this junk out there doesn't work at all. I don't talk about the stuff that I found that didn't work. I talk about the stuff that works. That's why I talk about it, at least for me, right? And then stage 3 is the penultimate. There's kind of a hidden stage 4 where you're really not doing anything. You're just like getting paid off of trades you make once every 5 years or something. But in stage 3, you have big wins. You're letting your runners run. You're cutting your losers early. You have a recognizable system. You have an edge. You're staying in your lane. If you're an NFT trader or if you're trading listings and you're really good at altcoin listings, you're not going and trading NFTs. If you're trading NFTs, you're not going and trading MSTR options on leveraged blah, 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 right? You know what you are good at. That's the important part. And it takes many, many years for people to understand what they're good at. I think it takes some bouncing around and just knowing what's out there. And that comes down to self-assessment, really, self-reflection. I talk about personality type a little bit in the past. I'll link that video. You're not going to see me at a casino. You're not going to see me buying lottery tickets. That just isn't me. You're not going to see me sports gambling. I need a verifiable edge. Otherwise, I don't care. I'm just not interested. And then your learning style, I saw this a lot, especially in higher education. People go their whole lives and they don't know their learning style. Do you learn best reading, visually, auditory. For me, it's 100% visual. It's 100% listening to podcasts. The last thing I want to do is read a book. That's just me. I absorb much more in the lab doing practical things than reading. So that's why most of the time you're not going to hear me talking about books that I read, because I just haven't. I haven't really read that many books on trading. For me, it's been more about the doing, actually getting in there, paying the trading tuition, losing over time, winning over time, and seeing what works for me. And you certainly need to record what you're doing. If you're not recording what you're doing, how are you going to figure out what you're doing wrong? So that comes with time. I'll show an example of that. But you need to figure out, are you a trend trader? Are you a range trader? Do you like fundamentals versus technicals? Do you like looking at on-chain activity? Is that where your edge is? Do you like looking at TVL? Do you like these large cap tech names? Or do you like stuff in the energy, like value sector, right? You need to find what works for you so that you can find your lane, find what you like, and stick to that. If we're using an axis, this is where most people are. They don't understand risk reward. And if you had to summarize what all this is, it's properly sizing risk, understanding the probabilities of risk versus reward. That's kind of it. Now that takes time. It's easy to say that. It's much harder to do that for most people. The other metaphor to use here is baseball. You don't always want to hit or need to hit the grand slam. You just need to get on base most of the time. You just need to hit a single or double. Sometimes you're bunting. Sometimes you're doing a sac fly, okay, right? Sometimes you just need to move a runner. You don't always need to find the home run grand slam every trade. If you're here long enough, you will be able to identify those, but that's certainly not going to be every trade. Those trades are probably going to come once a quarter, a couple times a year. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PVI, DBA, Kraken. Looking at the old BTC here quickly, we attempted to break down yesterday. Huge bounce. ETFs weren't buying. Sailor was buying. I don't know who else was buying. Not that it matters, but somebody was buying and brought us all the way up back to the open effectively. And we closed the day green, at least on Kraken. Is this enough to pull me out of cash? I don't think so. I think this needs to be a bullish TK cross. Part of the cloud is just, what is the system? You long here, you close your long here. That's that. The next long is going to be bullish TK recross, price above cloud. Okay. It might be late, it might be slow, it might be wrong now, might be wrong later, but on balance over time, it certainly has helped keep me on the right side of the trade. Now, I don't hate looking at low time frames here, 4 hours especially. It's been extremely noisy above 92, especially after mid-December. We already have had one fake out. We're almost to the point where you're getting another long trade triggering here, but not quite on the cloud. So what do I still like here is just patience, time. Either new lower lows, which is admittedly going to be very difficult up here. That would be sub 88, sub 89. Anything below 85, I like to the downside. And I just like time. So anything next week, anything after Friday, anything into the weekend, anything above 100 looks better to me than here. This still looks like no man's land. You still have a risk of head and shoulders. You still have the risk of the edge to edge. All that is definitely there. So as far as what was I doing early on, 2013? So most of 2014 was me trading miserably and DCAing. Now, again, I knew what I didn't know. I was probably closer to stage 2 than stage 1, just because I wasn't really doing much as I was learning what the heck I was doing. I got lucky enough, again, by the time I got to October, September 2015, I had a pretty good handle on what I was looking for on the cloud, on the daily, on the weekly, chart patterns, Wyckoff, that came later on. And then from there, I didn't really deviate. If you go back on this channel and you look at what I was talking about in 2016, it's the same stuff I'm talking about now. It's not like there's anything new going on here. That's another problem I think people have. Once they find something that works, most of the time, not all of the time, they want to look for other stuff. They want to just keep changing their system, changing too many variables at once. I think the most important thing is to know what type of market you are in. Are you in a trending market? Are you in a ranging market? and then applying different types of analysis based on the trading conditions. For ETH, what is there to force? What is there to do here? There's no trade at all on anything until we're back above 4K. So to be trading ETH based on any system, why? What is there to do, right? I don't think most people are doing this, where they're like trading ETH just because it's not really moving. They're trading other stuff. They're trading Sol, they're trading Sui. That's fine. You want to fish where the fish are, but you certainly don't want to be forcing trades. And this is where breadth comes in. I was lucky enough early on, there really wasn't that much opportunities to trade other things. It was kind of just Bitcoin, Litecoin, what else was around at that time? Some other stuff that really wasn't big enough to mention. And I can see where nowadays it's certainly harder for people to focus because they see this list on every exchange and they just see opportunities to take trades, make trades, right? Which is fine. But I also think it's important to know your system, know what works, know what doesn't work. You can take any trade on any chart, but over time, what you'll probably come to realize is you make more money on higher time frames, you make more money in trending markets, and you make more money on breakout trades. Most of that comes back to some sort of definable risk reward and or using a trailing stop loss. So a few more videos I'll link in the description. The personality video I did a couple months ago. This is a great example from Jason at Crowd Market Report on a trading journal. What are you doing and why? What are the details, right? He does a great job breaking all this down. This might seem tedious and useless, but if you didn't do well in 24, if you didn't do well in 23, if you haven't done well since 2020, and you're still here and you're not doing this, this is the place to start. What am I doing and why? When am I doing it? It's really not that hard to track entry, exit, stop loss, and what you're doing. I'll link the video that I used for the inspiration of this video, and then I'll link the classic trading tips and tricks article that I've done. It's been 8 years ago, 7 years ago. So it's certainly a journey. Don't beat yourself up over it if you are stuck in stage one. There's a light at the end of the tunnel. If you don't have a journal, start one today. If you don't have a verifiable system, you definitely need something. Even if it's multiple types of things that you're doing, at least track that in the journal. This was a breakout trade. This was a trend trade. This was because somebody said something on Twitter. This was because I saw this on the news, whatever. And then you can track that over weeks, months, quarters, years, and see, hey, maybe Kramer on the news, maybe he's not the greatest at giving me alpha, and I shouldn't listen to him ever. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.